Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 27th of January 2022. And we're producing our regular morning update providing prices, news and economic data. Today we see gold and silver prices fall after quite a hawkish FOMC statement yesterday. And the US dollar strengthens even further. So let's take a look. Welcome to Illuminati Silver. It's Thursday, the 27th of January 2022. And the time is 9:19 in the morning. Well, today is the day after the FOMC statement, where broadly they have confirmed that their tapering will reach maximum effect and ultimately then end, or their bond buying program will end because of the tapering, by March of this year. The Fed also confirmed that it will then be embarking on a process of interest rate rises, without specifying how many precisely, but listening to Fed Chair Jerome Powell's comments, both in terms of the statement and then answering reporters, it became abundantly clear that they are extremely concerned about inflation. They are generally happy about the economy and job prospects, and therefore they will do what they can to combat inflation, thereby suggesting that we will have more rate rises this year than originally forecast, or at least potentially so. And if it's not an increase in numbers, it could be a higher rate of increase. Now, we all know that because of the national debt, the Fed can raise rates only so high. And most economists agree that that level is somewhere between 2 and 3%. With the Fed funds rate at basically more or less zero, of course, looking at that, it does have quite a few quarter point, and in some cases a couple half-point increases that could occur. In terms of their balance sheet, he indicated that it is their intention to drive down their $8 trillion plus balance sheet, but that would probably occur once the interest rate rises have come into effect and not before. So, how is the news treating this today? Well, we can see on the headline, stock futures slide on hawkish Fed, and traders ramp up bets to see 5 Federal Reserve hikes this year. But before we look at that, one other piece of information that is affecting markets without a doubt, and that's the geopolitical issue of Ukraine. And we can see that UK warns Russia NATO may add deterrent troops. Let's just take a 30-second look at this. Defence Secretary Ben Wallace said on Thursday that the UK could support NATO countries by increasing its forces to act as a deterrent to any further Russian aggression. This comes a day after the US and NATO delivered written responses to Russia, broadly rejecting Moscow's demands that the Western alliance redraw its borders, close its doors to Ukraine's potential future membership, and roll back forces from former Soviet states. And experts have different views. The majority believe that Putin will not enter the Ukraine. This is all brinkmanship. But a few say he may have no alternative. We shall see how that pans out. But while there is uncertainty, then we will have a degree of turbulence in the markets. Now, looking at the markets, US futures wiped off earlier losses while European stocks trimmed declines, signalling easing concern about the Federal Reserve's hawkish policy stance to quell inflation. Contracts on the Nasdaq 100 briefly turned positive, while those on the S&P 500 paired declines. European equities paired losses as banks gained. Whenever, and this is a good tip for investors, although we're making no recommendations, whenever you have the potential for interest rate rises, one of the major beneficiaries in terms of stocks generally are banks. For obvious reasons, but a lot of investors do not seem to tie up those two ends. An Asia Pacific share gauge sank to the lowest since November 2020. Fed Chair Jerome Powell on Wednesday endorsed interest rate liftoff in March and opened the door to more frequent, potentially larger hikes than expected. That spurred a rapid turnaround in risk assets, which had rallied before the meeting. And we can see, updated at literally 10-15 minutes ago, traders are boosting bets for higher borrowing costs, with money markets now expecting 5 interest rate increases from the Federal Reserve this year and another 4 from the Bank of England. The wagers rippled through markets, with short-dated bonds and equities slumping while the dollar rallied. That followed Fed Chair Jerome Powell striking a hawkish tone at this week's meeting and signalling a first hike in March to put a lid on inflation. Money markets have priced 30 basis points of Fed tightening in March, which means some see a chance of a larger move than the conventional 25 basis points. By the year end, traders are factoring in 5 increases to take the Fed funds rate to 1.5% from 0.25% currently. Going over to the BBC, this is really non-financial news, but face mask changes. We hope customers aren't discouraged. Tesla expects 50% growth despite supply chain woes. And car production falls to the lowest level for 65 years. US and Canada, Biden to nominate black woman to top US court. And that's because of the pending resignation of one of the Democratic Supreme Court judges. And Musk's SpaceX rocket on collision course with Moon, according to some astronomers. Okay, let's look at what's happened to the dollar and the markets in general. Dollar index is up, now at 96.77, breaching the 95 level, breaching the 96 level, and now heading its way to the 97 level. However, we have to bear in mind too that when we get the announcements from the Bank of England and the ECB, if they are also going to raise rates, then that will temper the rise of the US dollar. Energy prices marginally down a third of $1, but we now have Brent crude literally 40 cents off $90. Stocks, took a little bit of a fall yesterday, but not significantly. Bearing in mind, though, they were quite heavily into gains before the announcement in the US. Overnight, Asia Pacific markets down between 2 and 3%, quite a substantial fall. And UK and European markets down broadly 0.5 to 1%. Economic data. Yesterday, we had the advance report on trading goods for December, and it was down 101 billion against a minus 101 billion, down from a positive 98 billion the month before. The good news is the new home sales starts have increased for December to 811,000 compared with 757,000 expectations. Now today we have some reasonable amount of data, initial jobless claims and continuous jobless claims, GDP for quarter 4, durable goods orders for December, core capital equipment orders and pending home sales for December. But tomorrow will be the game changer in terms of information because we have inflation, disposable incomes, consumer spending, and also consumer sentiment. Gold prices down $30. Yes, took a hit, but still holding above the $1,800 level at $1,815. Silver prices down 62 cents at $23.29. So gold is down 1.65%, but silver's down more at 2.5%. Cryptocurrency market following equities as normal, down nearly 3%, with Bitcoin now dipping back to $36,500. That's it for now. Shout out to our videos yesterday, Tuesday, Monday, and why the FOMC may be more hawkish than planned. It looks like we were right. And of course, we had our weekly update forecasting where we saw prices this week. That's it for now. This video is long enough. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign. Until tomorrow. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.